As we enter a new phase in the process of moving the federal funds rate toward a more neutral policy stance, I would prefer that future adjustments to the policy rate be made gradually. We should take time to carefully assess the progress in achieving our inflation and employment goals and consider changes to the policy rate based on how the data evolves. And given the current stance of policy, I continue to be concerned that easier financial conditions over the past year may have contributed to the lack of further progress on slowing inflation. In light of the ongoing strength in the economy and with equity prices substantially higher than a year ago, it seems unlikely that the overall level of interest rates and borrowing costs are exerting meaningful constraint. I'm also watching closely the increase in longer-term Treasury yields since we started the recalibration of our policy stance at the September meeting. Some have interpreted it as a reflection of investors' concerns about the possibility of tighter than expected policy that may be required to address inflationary pressures. So in light of these considerations, I continue to prefer a cautious and gradual approach to adjusting policy. And there's still more work to be done to bring inflation closer to our 2% goal. I would like to see progress in lowering inflation resume before we make further adjustments to the target range. We need to keep inflation in focus while the labor market appears to be in balance and the unemployment rate continues to be at historically low levels. By the time of our March meeting, we will have received 2 inflation and 2 employment reports. So I look forward to reviewing the first quarter inflation data, which, as I noted earlier, will be key to understanding the path of inflation going forward. I do expect, again, that inflation will begin to decline and that, again, and that by year end, it will be lower than where it stands now. But looking forward, it's important to note that monetary policy is not on a preset course. At each FOMC meeting, my colleagues and I will make our decisions based on the incoming data and the implications for and the risks to the outlook, and guided by the Fed's dual mandate goals of maximum employment and stable prices. I will continue to meet with a broad range of contacts as I assess the appropriateness of our monetary policy stance. But bringing in inflation in line with our price stability goal is essential for sustaining a healthy labor market and for fostering an economy that works for everyone in the longer run.